Hi guys, welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, lots of cues to digest this morning. Global cues are looking mixed. GIFT Nifty hinting at a pretty much muted start for the Indian markets and lots of stocks in focus. We'll be talking about that with our technical expert. And we'll also be taking all your stock-related queries. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. Well, with that, let's first bring on board our first guest for today, Siddarth Bhamre of Religare Broking, joining in this morning. Good morning, Sid. Good to have you. I think we're having a chat after a long time. A lot has happened in the market since then. We saw the Nifty come extremely close to that 20,000 mark and then we fizzled out 3% or something around that off the record levels. But, what is the next big trigger, one should be expecting going forward, given the fact that the markets are extremely volatile and stuck in a range, so to say?
Good morning, Indra. Yes, we're meeting after a long time, and thanks again for having me on your show. Slightly change in stance. I think a couple of months back when we were talking about how optimistic we are on markets, and we had a slew of idea where one should invest in, and those ideas still continue. But there is slight change in how we are looking at market, and it's not that we are talking this now. Since last 1 month, we have been a bit, I wouldn't say cautious, but not comfortable. Not comfortable in terms of valuation. You were mentioning in your opening commentary that how market has in range. But if you just see it from a bit longer perspective, we had phenomenal opening for this financial year stock market performance. Last 5 months, markets have closed in positive territory, and it is this month it would be closing negative. So in larger scheme of things, there's nothing different or nothing extraordinary if there is a correction in market. And it's after quite some time, we have seen that for 5 consecutive months on closing basis, our markets have given great returns. And now in month of August, we'll be, if we don't rally more than 2% today, then we'll be closing negative. I think that's pretty fine. And if I combine with my opinion on valuation, which seem to be rich at this point of time, this consolidation come correction, negative bias, call what you will, is a welcome thing to happen to fundamental investors. I also want to point out, Nandita, one thing that a lot of people are talking about, how loss of China would be benefit of India. No doubt it would be. But then what not many of us are talking at this point of time, that there is one market which is defying all laws of gravity year to date is Japanese market. In Japanese economy, we all know is bigger, much better in terms of transparency compared to China. And a lot of funds are moving there. So it is not necessary that the entire loss of China would be entire gain of India. A lot of funds are getting diverted. In fact, Japanese economy is coming out of this stagflation or deflationary environment after 25 years. So that is where funds are moving, and not everything is coming our way. Having said that, are we expecting that if we are overvalued, then our markets will show big correction? No. If you look at how markets are behaving, these are not signs of a market which will show you a very large correction. Time correction or consolidation with earnings again, doing what they have been doing since last few quarters. I think that would again bring us at comfort level. Even in this market where we feel that the valuation of Nifty is slightly stretched, there are a lot of pockets, both in large cap, mid cap segments, where we are seeing that growth momentum is and strong margins and stocks are available at reasonable valuations.
Siddarth, let's talk about some stocks on that note. I want to first bring your attention to the life insurance space. Post-budget, they have seen some bit of correction, but off late, they have recovered quite a bit. Anything you're liking in the life insurance space now?
So, Nandita, a few months back, we came out with a thematic report on insurance space. And though, we don't believe in timing, but fortunately, all these stocks which we covered in that space met their target prices, and we were bullish on most of the names over there, including LIC. But then what we are liking the most, even after this significant run-up in prices in last few months, is SBI Life. Now, despite very strong base in terms of premium collection, it is still growing at a reasonable pace of around 19% or so, the gross premiums. If you look at the channel, that is a banking channel, which ensures that there is a substantial growth. I think that is a key USP for this company. It margins declined here, Nandita, and that's the reason some of the participants might be perturbed. But let me throw some light over here. There are two kind of products, par and non-par, and margins in ULIP and protection funds are less. And we have seen significant growth in ULIP schemes, and that's the reason we have seen decline in margin in SBI Life. So our recommendation to our clients has been since last 2-3 months is to take decent amount of exposure in insurance space. The valuation parameter for this space is price to embedded value, and SBI Life has enjoyed 3 times price to EV, and right now it is available at 2.1 compared to the what numbers we are seeing for FY25. It's a reasonable valuation. It's near to the attractive zone, and we are anticipating a good revenue growth and increase in the valuation metrics, which would take prices higher. And we have a target price around 1644, which gives you around somewhere around 20+% returns from current levels.
All right, that's the view on the life insurance space. SBI Life is something that Sid likes. But Sid, let me talk to you about the premium bike space. We've seen competition heat up. We've seen premium bikes coming out of Hero stable, Bajaj stable, posing competition to Eicher Motors. Yes, just a few days ago, Hero has launched Charisma as well. But would you, or should I say that you are a Bullet wallet loyalist, and would you stick to Eicher among the premium bike segment now?
Well, I was at one point of time, and then I started cycling. So then I don't have bikes anymore, and I have a lot of cycles. But we don't have anything of that in listed space. So keeping that aside, Nandita, I think market has been very concerned, and rightly so, that competition is increasing. And from the valuation metrics, Eicher was quite expensive a few years back. But then same story was applied to Maruti as well. Stock did underperform for quite some time. Eicher Motors, if you look at, has the prices have been underperforming since quite some time. In fact, last 2-3 years, prices have not done anything, to be honest, after that bounce back from COVID lows. But then from the valuation metrics, at one point of time, Eicher was available at, 45, 50 multiples also, and now it is available almost at half of it, around 23 P. So it is a good stock. Quite possible that it might lose market share over a period of 1-2 years when the competitors would have higher output in terms of bikes which they are planning. So a lot of companies have mentioned about their tie-ups with international players and decided to launch. But are they going to launch what kind of sale numbers Eicher does in next 2-3 years? Answer to that is no. So it is going to take a lot of time for Eicher to lose a decent amount of.
I think
reduction doesn't means that there will be loss of revenue. There can be growth in revenue and loss in market share over a period of time. Because if you have 90% of market share, then definitely that can happen. But I believe valuations are attractive, and Eicher Motors can do pretty well in terms of stock price from current levels as well. So even this stock for attractive valuation and decent decent revenue growth, we believe should be part of your portfolio from 1 to 2 years perspective.
All right, Sid, we're running out of time, but one more question on the IT pack. I remember you've been a contrarian when it comes to the IT space, and of course, looking at the first quarter performance, most of them have disappointed, especially led by Infosys. But I remember last time I spoke to you, you were quite bullish on HCL Tech. So, would you maintain that stance after the first quarter earnings?
Yes, and as you rightly pointed out, that numbers have not been, very encouraging, or I would say disappointing. But what we have observed, Nandita, that everything is factored in price. You can't get these stocks, substantially below these multiples. HCL Tech for FY25 earning is trading at 14 times. An IT company, a large cap IT company trading at 14 times. Look at the stock performance; it has done well. I understand that there has been a revenue degrowth quarter on quarter, but year on year it has grown by 7% or so. Management has been confident, and that's the reason they have not changed their guidance. Looking at the scenario, I just want to say, Nandita, that Nasdaq has been the best performing index year to date. So people connect IT and slowdown very closely, but slowdown also leads to cost optimization, and a lot of spending on IT happens for cost optimization. So it is not necessary because the US is going to slow down means there is going to be very deep correction in the IT space. So I believe SCL Tech, even at current levels, is a decent buy. We have a target price of around 1333, a decent upside from current levels. So even that remains our one of the top picks.
All right, that's the view on the IT space. HCL Tech remains a top pick. With that said, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. As always, it was a pleasure speaking to you.
Thank you so much.
Right, on that note, let me bring on board our technical expert for today, Shrikant Chauhan of Kotak Securities, joins on offer. So that's one listing that you should be watching out for. With that, it's a wrap from me. Thanks a lot for watching. From me and the entire team, have a good trading day. And of course, stay tuned because coming up next is Opening Bell.